And I made the point that it's not your run-of-the-mill advice that we're going to be talking about here. Because for the most part, when you hear, hey, come and learn about cryptos, you immediately dive into which coins to buy and which coins to sell and all of that stuff. That's all very good. But hopefully, if you've been here first 4 days, you understand that there is a lot more to it than just knowing what to buy and what to sell. Okay, you need to understand how to keep your digital assets safe. You need to know the different strategies that you can deploy. And then yesterday, we talked about something interesting, understanding how much capital you have, how much time you have, so that you can make the best use of that, as you're deciding to get involved with cryptocurrencies. All right, there's a lot to cover on this final day, so I'll go ahead and get right to it. Let's provide context for everything that we're going to discuss on this final day. We'll do a recap, as is customary, of what we learned yesterday. Then we'll move on to the plans for today, which is really understanding how to be teachable, how to learn from someone who's done what you're looking to do, and basically go execute what they are doing, right? There's no need for you to reinvent things here. So really today I'm going to be giving a set of instructions and that's how we are going to model teachability. So I'll give you instructions, and they're essentially like best practices on what to do in the cryptocurrency space, some other things that we've not talked about up until now, and hopefully you will find it useful. As we do here, if you do have questions, do hold on till the end. We'll have that session at the back end where we'll deal with all your questions, okay? With that said, why don't we get right to it? So, by now, right, this slide should be very familiar to you, if you've been here all along, right? This is how we've been navigating through the last 4 days. We're using the letters of the word START to help us think about 5 main things that we need to consider when you are deciding to get involved with cryptocurrencies. We started day 1 talking about digital currencies and understanding the things you need to do to keep them safe. Because remember, there are a lot of bad actors out there who are looking to steal digital assets that you own. So that's where you start from. You don't start by, hey, what am I going to buy? It's how am I going to keep things safe? And how do I put systems in place so that, I am here for the long term. Okay, so that's how you start off with security. Next is the tools. So you need to know what you would use to buy cryptocurrencies. And we talked a lot about centralized exchanges, decentralized exchanges, and wallets where you would keep your, you would store, in quotes, your cryptocurrencies, right? Because wallets give you access to cryptocurrencies that you own. I talked about access on day 3, and that's access to education, mentorship, and strategies. Said if you want to accelerate the time, right, or shorten that time it takes for you to come up to speed here, you need quality education, right? You can learn this on your own, right? But there's several people out there, there's several opportunities out there for you to learn from other people who already have success in the space, right? Allow yourself to be mentored, understand what strategies they use to trade or to invest, and model what you're doing after them. That's really what access is about. Yesterday, we had the conversation about resources, and I won't dwell too much on that because we will do a recap in the next minute or so. But today, like I said in the intro, it's all about you learning how to be teachable. You're taking instructions, you're executing those instructions, and you're basically continuing that cycle, right, until you attain mastery and you're able to help other people do the same. Okay, so that's how we're navigating this, and we are on the final day. Now, let's move on to a recap of what we did yesterday for the benefit of those of you who were here and even those who may just be joining us for the first time today. Yesterday was about optimizing resources. So we said that there are 2 main resources you need to optimize when you're deciding to invest in cryptocurrencies. and that's the time that you have and the risk capital that you have. Okay. For people who are coming into this space for the first time, they tend to ask the question, how much money do I use to get started with cryptocurrencies? And they build on that question, and then they will say, based on that amount of money, how soon can I see a profit, or can I start making profit with that? So that's what this slide, which we shared yesterday, is supposed to help you think about. Okay, remember what we said yesterday. This is just a suggestion from my own experience, right? If you talk to 10 people in the cryptocurrency space, they will have 10 different opinions about this, right? But this has worked for me. I know other people that it has worked for as well. That's why I opted to share this suggestion yesterday about how much risk capital you have, so that you know which of the 6 strategies we've talked about you can deploy your money in. I think the main takeaway here is, if you're coming in here with very little risk capital, then probably what you want to start doing is focusing on trading, because some of these other ways that we talked about earning from cryptocurrency, they might take a while for things to play out. But with trading, you can start to see success in a month or 2, right? As long as you're applying yourself to learn how to trade properly. Okay, so trading is not gambling. It is not guesswork, right? It is applying mathematics and probability in an intelligent way, to the prices of assets that you're looking to trade. And then we gave some other recommendations for people with different ranges of risk capital. The other takeaway here is, obviously, the more risk capital you have, the more access, right, you have to the 6 different ways of earning from cryptocurrencies. And of course, on day 3, day 4, we dealt about what these 6 different ways are. If you're here and you're seeing these things for the first time, I'll strongly suggest you watch the videos for day 3 and day 4. We'll put links to those videos on the chat before the end of today's conversation, so that you can go ahead, watch those videos and catch up, so that you understand what all these different ways of earning from cryptocurrency are. It's important to do that because we will be talking a bit about these 6 different ways again, but in a different context today. So if anything here looks strange or not clear to you, please take the time to watch those videos. Those videos are already uploaded, okay? All right, so let's move ahead to what we have for today, because I want to be sure that we cover all the material. All right. Okay. So we're going to put everything that we've learned together. And yes, the other thing that just occurred to me is, yes, we will send the links to all 5 days, right? We'll send it to the email addresses of everyone who registered for this. So all of you will get access to the videos, okay? If you just check your emails after class today. All right, so let's kick off this final day understanding what the big picture is. So we talked about starting your journey in crypto, okay? And I think one of the things that's effective is for you to think about what the end should look like, so that you're designing the right plans to achieve that end goal. Okay, so on day 3 and day 4, we talked a lot about strategies. Okay, the 6 different ways you can earn from crypto: buying and holding, staking rewards, yield farming, the whole play to earn NFT metaverse space, trading, and then some other ways you can earn, including lending and borrowing, and using high yield savings accounts. So those are the 6 different ways or strategies that you can deploy funds in to earn from crypto. Okay, but strategies are not used in isolation. every strategy you use here must be tied to a long-term objective that you're trying to accomplish. Okay, you don't just come into crypto saying, I want to get involved in crypto because I want to make a lot of money, right? You will never know when you have achieved that objective. So you do need objectives, right? Proper objectives before you get into this space. So you know what the strategies are, that's fine. But if you don't have objectives, you will not be able to take advantage of those strategies properly. Obviously, once you know the different strategies and you know your objectives, if you're working with a mentor or a coach or someone who's experienced in this space, that person can help you design the plans that you need to take on a day-to-day basis to achieve your objectives using the strategies. Does that make sense? So if that makes sense, please put a 2 in the chat, okay? Because I need us to understand how objectives, strategies, and plans all tie together, right? This is the glue that brings everything that we've been talking about for the last 4 days. This brings everything together. Now, remember on day 1, we talked about what we're looking to achieve at the end of this class. It's for you to have complete clarity about what it takes to build, manage, and grow a cryptocurrency portfolio by yourself. You know, you don't need to rely on someone to validate the decisions that you're making. Now, below the portfolio on this slide, you see 3 different circles. Now, I'm introducing this to show you how I look at the market, or how I look at my portfolio, my cryptocurrency portfolio. I basically have three segments in my portfolio, if you will. One is what I call low risk opportunities. And then the other is the medium risk opportunities. And then you now have the high risk opportunities. And I've put some numbers there to just quantify the targets for what I'm calling low risk, medium risk, and high risk. Okay, so low risk for me in crypto is something that would pay up to 20% a year. That's low risk for me. Okay, medium risk is something that would pay somewhere around 50% a year. Then anything that, in my opinion, has the potential to do greater than 100% a year, I consider that a higher risk play. Now, what was the basis for me defining what is low risk? Well, I showed you, I believe it was on day 3, a savings account, right? Anchor protocol, where you can deposit stable coins and earn approximately 20% a year. So for me, that's the benchmark for low risk investment, right? If I have a savings account that can pay me 20%, why would I be aiming to earn anything lower than 20%, right? It makes no sense. So for me, low risk opportunities here would pay, you know, up to 20% a year, right? That's low risk. Or anything with a potential higher than 20% a year, you know, that's 50%, 100% is higher than low risk. These numbers are not cast in stone, right? You're not going to go online and type what is a low risk crypto opportunity, and then you see all the results telling you 20% a year. No. The point here is you need to define these things for yourselves. Now, I've put this out there because this is how I look at my portfolio, and I'm putting it out there and I'm saying this is a way you can consider looking at your portfolio in terms of risk. The risk and the kind of payout you're looking for by getting involved in different things. The message here is, don't have a portfolio that focuses only on high risk opportunities, okay? Because you know what we say about risk and reward. If you're looking to get a lot of returns, then you have to be willing to accommodate more risk. And one way you can think of risk is the probability or the chance that you would lose your funds. That's what we're talking about in this space. Okay, that's how we define risk. Of course, there is risk with every type of cryptocurrency that you get involved with. But if you do follow the techniques on security and safety that we talked about, especially on day 1 and day 2, you are in a much better place, because you're not just better informed, but you'll be better equipped to keep your assets safe from theft, or from any other or from loss of access in case your computing device crashes. At least now you know how to recover your accounts and do all those things. So this is the big picture, right? And this is what you should be thinking of when you're getting involved in this space. So don't just come here thinking, what cryptocurrency should I buy, or what cryptocurrency should I sell, right? That's secondary. You need to think about, what are my objectives? I know the strategies. I know the 6 ways to earn from crypto. Who's going to help me build the daily plans, so that when I wake up in the morning every day, even if I have a regular job or I have some other things that I'm doing, I know what I need to do that day, to stay on track to achieve my objectives using the strategies. And then I know how I have diversified my portfolio, right, to take advantage of different risk opportunities. So you can look at your portfolio at any given time and say, I have 80% of my capital in high risk opportunities. Is that too much? Shall I dial that back a bit and put some in medium risk? Or if you just look at the broad crypto markets, should I move more of my assets towards the low risk opportunities, because you want to preserve your gains or your profits? So this is the big picture. So go ahead, take a screenshot of this slide, because I do believe you will need this multiple times over the course of your journey in the cryptocurrency space. Okay, so now let's start breaking some of these elements down a bit, so that it makes sense and it's a bit more practical. Okay, let's talk about objectives, strategies, and plans. We're not going to spend a lot of time talking about the strategies, because that's what we did on this 3rd day and on the 4th day, right? So we spent time, we showed the examples of how you can earn in each of these 6 different ways. I'm going to focus, at least on the next 3 or so slides, on objectives, because this one is probably the part that you don't hear at all. You don't hear anything at all about this when people talk about cryptocurrencies. What you just hear is, someone is interviewing another person on YouTube and they're saying, wow, this 15-year-old turned $100 to 10 million, right? Or this 20-year-old turned $1,000 to $100 million. That's all you hear, right? But nobody really talks about, okay, so what are your objectives coming into this whole cryptocurrency space, right? And how do you know that you have an objective that makes sense, that will guide you? Let me just put this out there and say, if you don't have objectives that are written down, then everything that you are doing in the cryptocurrency space is a mistake. Even if you're making money, right? As long as you do not have written down objectives, I can guarantee you for free, right, that everything that you're doing is a mistake, because you don't have any rules. There's nothing that's guiding what you're doing. Okay, and one day you will hear a voice that will give you a suggestion that will cost you all that money that you have made. You need to have your objectives written down. Now, many of us have gone for goal setting classes. You've heard about SMART objectives. And yes, I know I have it on the slide, but if I had asked what's a SMART objective, everybody would say, yes, S is specific, measurable, attainable, relevant, time bound. We all know that. But I think you may be surprised, right, about how difficult it is in practice, to write an objective down. We have it in our heads, but we never write it down, and then you wonder why your cryptocurrency portfolio is, in a yo-yo. Okay, so let's go ahead and dive into this conversation about objectives a bit more, right? Because I need to drive this point home. And then when we are done looking at objectives, we'll talk about the plans that you can put in place. And I'll give you an example of what plans can look like. Okay, so having introduced the subject of objectives, let's do a very quick exercise. Okay, so let's spend about 3 or 4 minutes thereabouts. Okay, I have 4 different examples of objectives, and I want you to pick the one here of the 4 that is smart. So it is specific, you can measure the outcome, it's attainable, it's relevant, and it is time bound. So I want you to just go ahead and just type the number in the chat based on, you know, these 4 different objectives that you can see. Okay, so just pick the one that is a smart objective. Yeah. Okay, this is an open book exercise, and I see a lot of 4s. Really? So nobody likes number 2? Wow, I wonder why though. Okay, finally we have an independent thinker. We have a 3 on the chart. That's good. Now we have more 3s. Okay. Or is it just descending order? We are typing numbers 4, 3, 2. Okay. 4 different objectives. The first one is I want to make a lot of money so I can pay rent that is due next week, right? Second one is I want to grow $1,000, and the person has defined that as trading capital, and I want that to grow by 100x tomorrow. So basically overnight, right? You want to turn $1,000 to, what's that? 100,000? Yeah. The third one, I want to grow my account by 20%. And the fourth one, I want to grow my $1,000 capital by 50% in the next 6 months. Okay. All right. So let's see. So I think the broad consensus on the chart is I see a lot of 4s, a few 3s, and for some reason, nobody likes number 1 and number 2. Okay, that's fine. Okay. All right, let's look at which of these 4 objectives is smart per the definition. And I think you may be surprised. The answer is none of them. None of them is actually smart. They all have issues. So let's break it down, and I'll tell you why. And for those of you who chose number 4, I will explain why number 4 is not a smart objective in cryptocurrency. Okay. So the first one, I want to make a lot of money so I can pay rent that's due next week. Okay, so what is a lot of money? It's not specific. Yes, clearly, if it's not specific, you really don't know if it's attainable, right? It is relevant because, you know, rent is something that it's an expense that you have, right? So yes, it's good. He was going to channel the money somewhere, and it is time bound. It is next week, but you know, and it is measurable because you will assume, okay, the person knows how much the rent is, so that's how much they are looking to make. But because it's not specific, and by extension, it's not attainable, because what is a lot of money? Is that $1? Is it, you know? So that's what disqualifies this one as a smart objective. Okay, and I think everybody got that. Number 2, I'm growing $1,000 by 100x tomorrow. Okay, specific. So we know how much you're starting with. We know how much you want to grow it by, which is 100x, and we know your time frame, right? So that's why SM and T are fine. But is this really attainable, right, for the vast majority of people? And the answer obviously is no, right? This will be something we call outlier performance. Now, this is the problem you would have if you are setting objectives by yourself and you're not working with somebody who's knowledgeable in the space. Because if you show this to somebody who is knowledgeable, you know, they would immediately tell you this is a good start, but you need to be more realistic with your objectives. Okay, so 100x overnight is not something you want to shoot for, because you will likely lose all your money in the process. And you know, there's the relevancy clause, which is, okay, so when you do make all this profit, what are you going to do with it? Okay, that's an important component that we don't think about. The third one, I think, is pretty straightforward. I want to grow my account by 20%. Well, what's in your account, right? It is measurable. It is 20%, but what are you starting with? You just say my account. What's there, right? And what's going to stop you from removing money from that account and putting it somewhere else? So you need to be specific with how much you're deploying in the space. If you don't know how much you're starting with, how do you know the goal is attainable? Let me give you an example. What if it is $1 in the person's account and the person says, I want to grow my $1 by 20%? That $1 may not even be enough to pay transaction fees on one of the websites that we are showing. So this is not necessarily attainable. The relevancy issue comes up again because, yes, when you grow your account, what are you going to use that money to do? Okay. And there is no time frame. So are you looking to do this in 12 months or in 12 days or in 12 hours or 12 minutes? We don't know. Now, what's the issue with number 4? The issue with number 4 is the relevancy. So it is specific, it's $1,000, you're growing it by 50%, you have a time frame, and it is very, very achievable to do 50% in the next 6 months. It is achievable, you can do that. But the question again is, how is this relevant to you? So let's say you achieve this objective, right? So what are you going to do? Okay, what's going to stop you from giving that profit back to the market? Okay, so when you achieve this objective, what will you do? So that's where relevancy comes in, right? You need to know before you start what you're going to do with the profits that you make. Otherwise, you have a high chance of giving that profit back to the market. So that's why relevancy is very important. You need to know what you want to use the money for, okay, before you start. And like I said, this is not something you hear a lot of. You just hear, I want to make a lot of money. I want to make a lot of money. Yes, but so what? What's your why? What's driving you to do that in the first place? Okay. So now let me give you an example of what I would consider a smart objective. And don't focus too much on the numbers. Focus on the principle behind the objective. Okay, that's what's important in this space. Okay, so this is an example of an objective that is smart. I want to grow $1,000 in trading capital by 20% in 6 months. Now, listen, if my investment falls to $800 at any time, I will immediately liquidate this investment and wait for another opportunity. If you do accomplish the 20% goal, I will donate, a percentage of that to a charity of my choice, right? Everything is in there. Now, does it mean that when you're coming into this space, you're coming in here because you want to donate money to charity? No. Okay. The reason why you want to grow your account, maybe there's something you want to buy, there is, maybe someone you want to help or impact their lives, or there's a new home you want, or there's some other thing, right, that you want to use that money to do. Okay, the what is relevant to you. So that's why relevancy comes in. It must be relevant to you, right? Some of you will look at this, see this about donating money to charity, and you will roll your eyes because that's not your thing. There are some other people who will see this and, yes, this resonates with me. I want to give money to charity. I want to help other people. The point is, whatever you pick on this final sentence, it needs to be relevant to you. Now, notice, we often tend to focus on the positive outcome, which is, I want to make 20% in 6 months. You need to understand that this is investing, right? So you need to know before you start what will happen if the money drops to a certain level. You need to know, right? And this is an important reason why people don't preserve the profits that they make in this space. They will buy something, it will go up in price significantly, and they just sit down there and they are looking at it. They are not taking any profits. Eventually, everything comes back down and they've given all that profits back to the market. I know, I did that many times last year. Okay, so I'm not just telling you something that's theoretical. It's a very common occurrence. But if you have objectives and they are written down, right, you have something that you can hold yourself against, right, and hold yourself accountable to. And this is another reason why I believe it's really important for you to work closely with somebody in this space. Because if you're not accountable to anyone, you will shift your goalposts. You have that temptation to shift your targets. Maybe you're looking for 20% in 6 months and you make the 20% in 4 months. you know, you'll be like, I wonder what will happen if I stay here for another 2 months. Okay. But you've forgotten that your goal was 20%. You hit that goal, get out, right, of the market, or take some profits off the table in line with your objectives. Okay. So just go ahead and remove some things. Don't stay there and wait and say, oh, since I achieved my objectives sooner, let me see what else will happen, right? If I continue to stay here, you know, that's a very quick way for you to lose money. And let me just emphasize this one more time, that you don't only think about the positive outcome. Okay, you must think about, you know, the negative outcome and define a limit. Don't just hope that when price is going against you, it will recover and go in your direction, right? No one owns the market, you know, so you need to define for yourself when you're going to get in and when you're going to get out before you get involved in any investment opportunity, right? This, I can't stress this enough, right? If this is the only thing you take away from the 5 days that we've been here, then you've done yourself a world of good, because this single thing here is the biggest reason why people give up profits that they've made in the cryptocurrency markets. All right. So that's it about objectives and how they work. Now, let me spend some time here, right, explaining what we have on this slide. So on this slide, we bring everything together. So you have a portfolio that has low risk opportunities, medium risk opportunities, and high risk opportunities, right? And you have 6 different ways that you can earn from cryptocurrencies, right? That we have across here on the top. Remember I said, if you know your objectives and you know the strategies, then you can now work with someone to help you define the specific plans that you can execute that will help you achieve, you know, the objectives you're looking for. And I'm giving you here, right, an example of strategies, and more importantly, the specific plans that I used last year. I will update this again for this year, but this is what I used last year, right, in the cryptocurrency space. And my job going from month to month was really deciding how much money do I want to put in the low risk opportunities across all these things. Okay. How much money am I putting in the medium risk opportunities across all this? And then how much money am I putting in high risk opportunities across all this? Now, I am not saying that throughout last year, I did 18 different things, because if you do 6 by 3, there are 18 different plans on this slide, a minimum of 18 plans. But the idea here is to show you that at any given point in time, there are different opportunities that present themselves in the cryptocurrency space. As you do research on the different opportunities, you can have a chart like this and just, you know, based on your research, add a plan to the list, something that you would want to consider down the road, you know, something that you would want to get involved in down the road. It doesn't mean that you have to do everything at the same time. Absolutely not. It's just that you need to know the different opportunities that are out there. That's the first way you use this kind of slide. The second reason you use this is so that you can, at a glance, look at your portfolio and figure out what you're doing and the amount of risk that you're taking on. Okay. So yesterday we talked about something called hyper compounding. So you have sites where you can lend and you can get paid to borrow. And I said what you can do is you can deposit cryptocurrency on the lend side. You can go borrow cryptocurrency, and that cryptocurrency you've borrowed, you can go and deposit it on the lend side, right? And you can continue that a number of times. Okay. Now, it's easy to describe that and say that's a strategy, but if you're looking very closely, you will see that I consider hyper compounding to be a high risk opportunity because you run the risk of being liquidated depending on what type of cryptocurrency you're doing that with. If it's a stable coin, yeah, probably not so much. But if it's a volatile cryptocurrency that you're hyper compounding, yeah, you run the risk of being liquidated. Okay. I talked about using Anchor protocol as a savings opportunity, right? An Anchor protocol, you deposit a stable coin and you're able to earn 20% a year, right? So it's not surprising why Anchor protocol is a low risk opportunity. Okay, because remember how we defined risk: 20% a year, 50% a year, 100% a year for the high risk opportunities. Okay, now you need to think about this as well in the context of this other slide that we showed yesterday, because remember, the number of spaces that you get involved in really depends on your risk capital, which is how much you can afford to lose without significantly altering your standard of living, right? That's what risk capital is. Now, for those who have smaller amounts of money, we're talking $100 or less, many of these spaces are not really accessible to you or will not make sense for you to participate in. If you have $100 or less, you would probably want to focus on trading. Okay, now there's different types of trading that you can do, and you can see that they are all listed here. Now, anytime you're adding leverage to trading, you are increasing the risk that you are taking. Okay, if you're just going on Binance and you're doing something called spot trading, you're exchanging Bitcoin for a stable coin. That's spot trading, right? That you're doing on Binance. That is significantly lower risk than you opening a broker account and trading on leverage on cryptocurrencies. Okay, now I've put some rough numbers here. If the leverage you're using is, about 5 times of the capital you have, okay, maybe that's medium risk. But anything above 5 times, I consider that to be a high risk trading opportunity. So it's going to take you a couple of, the first day you get involved in cryptocurrency, you are not going to be able to do this, right? You won't be able to do this without the help of someone who's experienced in this space. I didn't do this on my own. I worked with experienced people to build these plans, right? And to come up with the opportunities that were comfortable for me, right? You need to do the same thing for yourself. But if you're sitting down on your own and you're trying to figure this out, or you're just looking at all this and you say, okay, so if I want to make a lot of money from crypto, I can just go to OpenSea and trade NFTs. You're likely going to lose all your money if you don't know what you're doing. Okay, because NFTs are high risk. Okay, there's no way to even sugarcoat it. They are high risk opportunities. They can pay you a lot of money, but you can also buy a lot of worthless NFTs. Right? So you need to know what you're doing. That's the message here. Let me focus a bit on this conventional area because I have introduced a terminology there that we've not necessarily talked about in class, and that's something called layer ones. So the conventional opportunities that I look for in cryptocurrencies, right? So I would consider low risk to be something like buying and holding Bitcoin. Okay. As far as I'm concerned, in the next 12 months, Bitcoin is not going to go up by 100 times, right? It's very unlikely. Okay. These big, large cap cryptocurrencies, it is going to take a significant amount of capital, right, to come in for them to change price. What do I mean by that? Okay, so let's use a chart example now to illustrate what I'm referring to. Okay, all right. So this hopefully by now this site CoinGecko is familiar to everyone. Remember we introduced this believe it was on day one, where we were talking about digital currencies, what they are, and how you can use sites like this to at least identify the digital currencies that are out there. Now, remember when we first showed this, we said focus on the names and ignore everything to the right. But I'm going to use this time now to explain what some of these columns are to the right, so that you get a better appreciation of what you can use this site for. So look at this list. Remember, this CoinGecko has a little over 12,000 digital currencies listed here, and they are currently listed based on something called the market cap. Now, the market cap is calculated by taking into account the quantity of Bitcoin that is in circulation right now, and you multiply by the price. So let's click on Bitcoin here so that I show you where all those numbers are coming from. So you can see market cap here, right? And thankfully, by the time you even put your mouse here for market cap, CoinGecko gives you the definition. So you see it's the current price multiplied by the circulating supply. That's the quantity of Bitcoin that's in circulation. Now, many people know that, and this is one of the things many people know about Bitcoin, that Bitcoin has a total supply of 21 million. So after 21 million Bitcoins are created, no new Bitcoin can be created again. We'll just be buying and selling the ones that exist in circulation. Okay, this is obviously unlike paper money, Naira, the dollar. I mean, every central bank, or every government can decide really to print an infinite amount of paper money. Okay, so this is one of the reasons people like digital currencies, because some of them have a maximum supply. So how do you get this market cap number again? You look at the circulating supply, which is the quantity of Bitcoin that's basically going around, that people hold currently, that has been created. You take this number and you multiply this number by the current price. That's where you get 815 billion US dollars from. So that's market cap. Now, if you go back to this list, you'll see that these cryptocurrencies or digital currencies are listed in descending order of market cap. Okay, so Bitcoin has 815 billion. As you scroll down the page, you see here we are Polkadot with 21 billion. And then as you keep going down the page, you have other ones as well. Now, just a rough rule of thumb, right? I tend to consider things that are large cap cryptocurrencies as those that have at least $1 billion US in market cap. So that will be everything on this first page, pretty much, unless I am mistaken. Yeah, pretty much everything on this first page, the top 100 cryptocurrencies, I'll consider those to be large caps. So when you see under conventional, buy and hold large caps, for me personally, if I'm buying cryptocurrencies on the first page, once I've made 20% in profit, right, I tend to exit that position and just wait until a better buy opportunity sets up. Now, I can do that multiple times in a year, but the aim is to be disciplined in waiting for that price target to be met and then exiting the position with some or all of your profits when you've hit that target. So it's that discipline that helps you make money here. So that's what I do with large caps. Now, you can just imagine that Bitcoin is currently around 815 billion in market cap. Okay. Let's use an example for Cardano, for instance, to reach the same market cap as Bitcoin. It means you need 20 times, this current market cap, right, to enter into Cardano. Now, why am I saying this? You know, sometimes you hear people put out interesting price targets for cryptocurrency. They'll tell you, oh, I want to buy Cardano because Cardano is cheap. It is $1 and Bitcoin is expensive. It is $42,000. Hopefully we made the point on day one that you can buy fractions of these things. So the price really is not as important as the market cap. But if let's just say now you've left this boot camp and somebody is telling you that Cardano is likely going to go in price, right, from where it is to $20 by the end of the year, okay? The way you should think about that is, okay, if Cardano goes from $1 to $20, that means Cardano will almost be where Bitcoin is now in terms of market cap. So you need to be asking yourself, does that price target make sense? Okay, you understand what I'm saying? So you don't just buy Cardano and you say it is $1 and you're buying it because you think it is going to go to $20. For Cardano to go to $20, that means the market cap needs to be somewhere close to 800 billion. That's a lot of money that needs to come in to Cardano, right, to boost the market cap like that. So when you look at cryptocurrencies and you're thinking of, you know, which ones you should buy, don't even bother really at first looking at the price. Focus first on the current market cap, you know, and then use that to judge price targets that make sense, that are reasonable. All right, so let's come back to this. So I said I wanted to spend some time on this and introduce two terms that we've not talked about in class. So I've explained what large caps are. Generally, if it's, you know, $1 billion and above, I would consider that a large cap cryptocurrency. A mid cap cryptocurrency for me would be 100 million to $1 billion US in market cap. Whereas a low cap cryptocurrency for me is under 100 million, right? Different people have different divisions that they use. Just use your own and stick to it and make sure it makes sense to you. All right, so now you know what large caps are, mid caps are, and low caps, right? You know what they are. Now, what is a layer one digital currency, right? Now, you may not have noticed, but we covered that when we used this site, DeFi Llama, okay? Remember I said you have like the major cryptocurrency networks up at the top. And then for each one, like when you click on Ethereum here, you will see that it shows you different projects that are built on the Ethereum network. So that's how you know what a layer one cryptocurrency is. A layer one cryptocurrency, the simple way to define it is a digital currency or a network that enables other applications to be built on top of it. Okay. Now, remember we talked about Anchor Protocol, right? And I showed you this when we talked about Anchor Protocol on day 3. Anchor Protocol is an example of an application that is built on a layer one network. So the Terra ecosystem is a layer one. And then on top of that layer, you have all these other things that are built. So what that means is without the base, without the foundation, you cannot have any of these things built. You can't have them, they won't exist, right? Because they need to be built on top of the layer ones. And that's what these things are that are listed up here. Polygon is an exception, but you know, we can discuss that at some other opportunity. For now, just think about this way, that another way you can think of cryptocurrencies is which are the layer ones, the foundation that allow other things to be built, right? Because without these ones, all of these other things that you see here would not exist. Now, how does that apply to buying and holding cryptocurrencies, right? Personally, if I see layer one cryptocurrencies that are between 100 million and $1 billion US in market cap, I put them on a short list of cryptocurrencies that I want to buy, right? So this was how, I found out about cryptocurrencies like Luna last year, or Solana, or Avalanche, right? Those are layer one cryptocurrencies. So the reason you're buying them is not because people are just rushing to buy them. You're buying them because you understand, okay, I understand what this cryptocurrency is supposed to be. It's supposed to be a layer one. Other things will be built on top of it, which means there will be demand for that layer one cryptocurrency. So that's a good reason for you to have it on your short list and look for good opportunities to buy it. Obviously, as you go towards the lower cap end of the scale, these are like generally new projects that are just coming into the space. My preference for low caps is if I catch a layer one that is early, right, I would consider investing in it. However, just be aware that in this area, you have a lot of volatility. If you're right, you can find a cryptocurrency that can go up in price by 5 times or 10 times or even more if you're right. If you're wrong, you will just see this slow descent towards zero, right? And you can essentially lose your money. So don't just think, oh wow, I'm looking for cryptocurrencies that have lower than $100 million in market cap. And I heard on the bootcamp that if you buy them, you can make a lot of money. Yes, I hope you also heard that it is a high risk opportunity and you can lose all your money. So do understand how you're allocating your capital, right, to these different opportunities. So hopefully this makes sense, right? On this slide alone, we can have another 5 days talking about the different opportunities that exist there. What's the point here? The point is, you want to start your journey in crypto. It's not just about, buy this, sell that. Why are you buying it? How much of it are you going to buy? How long are you going to hold it? And where does it sit in terms of your overall plan? And how is it going to help you achieve your objective? So there's a lot to this thing, right? You need to treat this seriously, like a business, not necessarily a hobby. But if it's a hobby for you, it's fine. You don't need this level of detail. But if you want to get to the point where you build a portfolio and you manage a portfolio by yourself, you need to know these things, okay? Because these are the things that will give you an edge out there. All right, enough said about strategies and plans. Let's move on to, well, I know this slide says final considerations, but after this, there's one more bonus slide that I added because I made a promise that we will talk about what you should be thinking of, right, when you want to buy digital currencies. What should you look out for? Because we keep saying, or we keep saying, do your research, but okay, yeah, but what research are you doing, right? In order to buy, to know which cryptocurrencies are worth buying. But let's talk about some other considerations, right? That things that you need to be aware as you go on with this journey, your cryptocurrency journey. And we'll talk about 6 things. Number 1 is, where are you actually going to be doing this trading or investing? Okay. Now what do I mean by this? You need to think about the infrastructure that you're going to use, right? Now, this is serious, right? This is really important. You're going to need to ask yourself, okay, am I in a place where I have, adequate power supply? And if I don't, is there a style of trading or investing I want to use that would require continuous power? Okay. And if I don't have access to continuous power, is it going to be possible for me to achieve that style which fits me? Okay, so that's something that you need to think about. What's the infrastructure that you would need? Of course, we've talked about best practice. Use a dedicated laptop for this thing. I understand it's an investment, but best practice for me, in my opinion, use a device that is dedicated, and think about backup devices. So even though I use a laptop that's dedicated for all things cryptocurrency, I don't save any information on the hard drive of that laptop. So connected to my laptop are 2 external hard disks. Okay, and that's where I save the information. So why do I have 2? So I save it on 1, and then every week I back up information that I consider to be sensitive. Now, sensitive information does not include my passphrase for any of my wallets. Remember, I've said that should not be on your laptop for any reason. People have asked me, okay, I've just created my wallet. Can I put the secret phrase or that 12-word phrase? Can I back it up on the cloud? On the cloud? Are you kidding me? No, you can't. Okay, please print it out, put it on a piece of paper, lock it away, protect it against fire and water damage. Do not back it up to the cloud for any reason. Okay, put it away from your laptop. The second thing is, how are you going to monitor your trades? Okay, now this implies that you are recording what you're doing. Okay, so you need to keep track of what trades you are taking or what investments you're making, the price at which you bought things, the price at which you're selling things, how much profit you've made, and then the important lessons that you're learning from each different device, from each trading experience. You need to write all these things down so that you have a basis, to either make adjustments or continue doing what you're doing. All right. So something for you to think about. Another thing is, how are you going to deal with family? Okay. So if you're like me, I do have a family, and I cannot just lock myself up in the office all day, in the name of trading. Then trading has become my life, which is not the goal here. The goal is for you to have time for everything, have time to attend to family, attend to their needs, or even go out and, look at the sun, right? You're not just going to look. That stereotype of traders sitting in front of 20 screens, and staying there all day, that's not the only way to make money, right? You need to know how to use your time well. And that's why we talked about what we did yesterday, optimizing your time and your resources. So it's important. You need to know how you're going to deal with family. Will you have a dedicated time when you trade? And just make it clear to members of your family that this is me time, right? And this is the time I'm going to spend trading. Or if you live in a building that's shared with other people, right? Is there a point in time in the day where things are quiet and you can actually think and make sensible decisions? Versus, there's a lot of noise, TV is on, there's a lot of distractions and you're not able to focus. You need to focus on this thing and have quality time, learning, trading, so that you don't make mistakes. That also goes on to the fourth point, which is, when are you going to actually trade? At what point in time in the day? So if you do have a 9 to 5, we talked about you designing a plan that fits your lifestyle. And this is where a mentor will help you. You don't need to quit your job to do this. Okay, let's just put this out there. You do not need to quit your job to do this, even if you want to manage this thing yourself. What you need to do is understand what time you have that's available and work with someone who's experienced. And then they'll tell you, hey, you know what? Maybe just spend 30 minutes between 5 a.m. and 5:30 each day. And that may be all you need, right? Yes, it may limit the number of opportunities that you have access to, but that's a choice that you have made, right? Versus you staying awake the whole night and then you're not productive in the office. So now your crypto portfolio is going down, your office performance is going down, and you're losing both ends because you're burning the candle at both ends, right? No, so just set this up so that there's time for everything. I can't stress how important number 5 is, right? The moment you get to the point, right, where you say, you know what, I know everything, I don't need to learn from anybody, when you get to that point, right, you've hit your peak and it is all downhill from there. Right? You cannot discount trading education. So you need to ask yourself, where are you going to get your education from, right? Or who are you going to be working with? Or are you going to be in a community of people that can challenge you or share ideas, right? So that you're not just a local champion. Other people, are able to share what they know with you, and you can share what you know with them. And then there's also personal development, right? Because there's a lot of discipline you need to be successful in this long term. I've talked about writing objectives down. There's almost 50 people on the call, right? If I tell you that fewer than 10% of you will actually leave this place and go and write down their objectives, right? In fact, I will be shocked if more than 10% of the people here go out and actually write down their objectives. So that's how, that's the kind of discipline you need to be successful in this place. And please don't forget the final point. You need to be able to reward yourself, right? So this is not just a continuous, never-ending grind. When you do hit some milestones, in fact, what I would say is put it in your objective, right? If I hit this objective, I will reward myself by doing this, that, or the other. Okay, and hopefully the reward isn't that I will spend my capital and the profits, right? So you understand what we mean, right? So, but find a way that you will reward yourself so that you have the motivation to set a new goal, a new objective, and then to work towards it. All right. So good. Go ahead and at this point, put your questions on the chat. And while you're putting those questions on the chat, I'll go ahead and discuss something that we I think there was a question about this yesterday about, so there's 12,000 cryptocurrencies out there. How do I narrow that list to something manageable so that, I am able to focus my attention on maybe a handful of cryptocurrencies that I would analyze and wait for good opportunities to buy. Okay, and I think this slide will help you, because it helped me a lot last year. Okay, for me, there are 5 things I look out for when I want to develop a short list of cryptocurrencies. Okay, now notice what the title of this slide is. The title of this slide is what crypto to buy, not when to buy. There is a difference between what and when. When is timing. What is, does this even make sense? Okay, so you might want to buy a car. For instance, you've decided on the model of the car you want to buy, and you've decided on how that will help you achieve certain objectives. Okay, that's just a decision on the car you want to buy, right? You still need to ask yourself, when is a good time to buy that car? So the fact that the car is something that aligns with your objectives doesn't mean you immediately jump in and spend it, especially if you don't have the money. Same thing that happens in the crypto space. You need to have a way to narrow down that list so that you can focus on a few things and ignore all the noise. Let me spend a couple of minutes just talking through these things. If you're here and some or more of these things do not make sense, we can have a conversation outside here when I'll be happy to explain. So there's 5 things, right? The first one we started looking at when we were using CoinGecko, and it's looking at the attributes of the cryptocurrency. Generally, you want to pay attention to digital currencies or cryptocurrencies that have a maximum supply, which means they don't have an infinite supply. There is a notable exception to that, and that is Ethereum, right? Or Ether, to be technically correct, because right now it still has an infinite supply. They're trying to make a change to that though, but right now it has an infinite supply. Okay. Now, generally, you want to focus on things that have a limited supply, because then you know that there is a chance that demand will, up to a point, demand will assist the price to go up. And like I said, you pay attention to the market cap, not the price. Okay, when you want to know what to buy, it's the market cap that you look at. So hopefully that example that we did with Bitcoin, you understand why we are looking at market cap and max supply. And those are 2 examples of 2 websites that you can go to just list different cryptocurrencies and to be aware of that. Okay. The second thing you need to look out for is something called allocation. Now, when a developer creates a digital currency, right, there are usually vested interests. Now, the developer is creating that digital currency because, believe it or not, for the most part, they want to make money. Okay. So they may approach investors and say, you know, we have this vision, you know, and this cryptocurrency, this is what we think it will do, and we think there will be demand for it. Can you invest so that we can get this thing off the ground, right? And then we will reward you by giving you a portion of the total supply of the cryptocurrency that we are going to develop, right? So you need to pay attention to how much of the cryptocurrency is allocated to investors, how much is allocated to the developers, and then how much is available to you and I, right? The public. Okay. Because let me give you a very extreme example. So if you find a cryptocurrency that is launched like tomorrow, and they tell you that 40% of the cryptocurrencies, all the cryptocurrencies that will exist, right, they are allocated to investor somebody. Another 40% are allocated to the developer, and then 20% is available to the public, right? You know what will happen? What will likely happen is if that cryptocurrency goes up in price significantly, guess what? The investors, and it may only be 2 people, right, that own that 40%, they can sell the 40% overnight, right? And the price of that cryptocurrency can just come crashing down. So you need to know the allocation that is proposed by the developers, and you can find that from something called a white paper. Okay, so if you look at CoinGecko, you will see a link to the white paper of some cryptocurrencies. You might be asking me, okay, what if the project doesn't have a white paper, right? So I can't find this information, you know, but all my friends are telling me to buy it. Well, this is where you need to be disciplined and principled. If you can't find the information, be comfortable sitting away from that opportunity. There are many other opportunities. You don't need to catch everyone, right? So invest in what you understand. This third one is really, really important, and it's called utility, right? The digital currency must be solving a problem. Okay, or it must be helping people solve a problem. And generally, when you look at something called a roadmap for the project, they will tell you the problem that they are trying to solve. Okay, now, if you look at a cryptocurrency's white paper and you see the problem we want to solve is world hunger. We believe that there are too many people who are hungry, and we are going to ensure that this digital currency solves world hunger. If you see something that vague, right, please, the fact that they have a white paper doesn't mean you should go and invest, right? That's a very vague problem statement. Organizations that have been set up to solve world hunger have not done it. It is not a digital currency that's going to solve it. Okay, so you need to be able to think independently here and rationally and ask yourself, why would a rational person buy this cryptocurrency, right? What's the vision that the project team has, and does it even make sense what they are trying to do? Or are there already thousands of people doing the same thing that they want to do? How are they unique, right, from other people? Okay, that's something that you look out for. And these are examples of places you can go to look at it, but don't just rely on the white paper. Okay, just pay attention to other sources as well. Credibility, this is a big deal, right? One thing in cryptocurrency, I told you, one of the reasons people like it is, for the most part, you can be anonymous, especially if you're doing decentralized finance, right? Nobody knows you. They only know your wallet address, right? And they can't really link that to you. Unfortunately, there are many cryptocurrency projects that we don't even know who the investors are. We don't know who the developers are. Okay, now that can be an issue. I'm not saying you must always know who the investors and the developers are, but I am saying that if you do know who they are, that can give you confidence. Now, don't just be fooled by a website page that has people's faces and LinkedIn profiles. I've seen many of those. By the time you click on the link to the LinkedIn profile, there's nothing there, right? Those people have not done anything. They are just, trying to impress you with pictures. So doing your research isn't just something you spend 5 minutes doing. Spend the time to understand these things, right? It will help your confidence in the different projects you want to get in. And I think the other thing you must be aware of is the community. Now, every cryptocurrency, what will tend to happen is they have a community either on Telegram or Discord where they share information. If you go there and you ask a question, hey, I'm looking for the white paper for this project, and they tell you, no, there's no white paper, just buy, it's going to the moon, guys, to the moon. Please don't even bother wasting your money, all right, on those kinds of projects. Those people are not serious. Because if they are serious, they will be happy to share their vision with you, their plans, their milestones, what they've accomplished, and you may be able to ask in some cases, so who are your investors? Okay, and they may give you some information that's not available online that you can go and check and confirm. Okay, so use these five pillars, right, when you're trying to narrow down the list. And for me, this is really quick, right? If I just say a cryptocurrency, I look for white paper, I don't see it. I look for information on the investors, I don't see it. It just goes off the list, right? And then I move on to the next thing. So that's the way I do independent research, and I don't rely on YouTube or Twitter or social media to tell me what cryptocurrency to buy. All right. So let's see what questions we have. Okay, I do see a couple of comments. Thanks for putting that comment out there about what kind of hard drive you should buy. Can you even buy magnetic disk hard drives anymore? Hopefully you can't. Hopefully you can't. And even if you could, right, those things should be in museums by now. How technology has improved. But you're absolutely spot on, right? If you're going to use external hard drives, do make them solid state. I think most modern devices, right, external drives are solid state. But please check that what you're buying is a solid state hard drive if you're going to use it. Okay, what are some of the ways to optimize the process of vetting projects? Okay, yeah, I know maybe you're looking at these 5 steps and they're like, oh wow, it's a lot, right? Maybe by the time you're doing this for the first time, it might take you an hour or 2. But to be honest, I've gotten to the point now where you give me a brand new cryptocurrency, going through these steps, right, will take me 30 minutes or less, because I know exactly what I am looking for, right? It takes you less than 5 minutes to find out the attributes of the cryptocurrency, whether it's on CoinGecko or CoinMarketCap. Some of the very new ones may not necessarily be listed here, and you may need to go to some other places to find out. But remember, there are 12,000 cryptocurrencies, right? Focus on a few. Okay, so for you, one way to focus on that is you might just break that list down by market cap and then do the research on those ones. Or you may focus only on layer 1 cryptocurrencies. There are not many layer 1s out there. They are not up to 100. Okay, so there are not many. So you can focus only on layer 1s and monitor those. The last thing you want to do is to go to CoinGecko and you say, wow, today is the 11th of February, right? And then you start from Bitcoin until you get to cryptocurrency number 12,525, right? You'll be there a long time. So that's analysis paralysis, right? So you know what, be comfortable missing out on some opportunities. Just pick a few, right? You can decide to pick the first 5 on the list on CoinGecko and understand how to use these different things. But the more you do this, the easier it becomes, right, for you to go through this. I don't outsource the vetting of projects, right, to other people. Yes, there are many people on social media who have an opinion, okay? And some of them do have good intentions, right? They are not asking you for any money. They're just putting out content there. Yeah, that's good. But I think you should get to the point where you're able to vet these things for yourself, right? Because believe this, it is good for your confidence, right? It's really good that, okay, this is the reason why this cryptocurrency is on my short list. When you buy is another matter, but at least you know why it's on your short list. Is LinkedIn good to research on investors? I'll tell you, not all investors put a lot of their information on LinkedIn, but funny enough, one place where you will find many of the popular cryptocurrency investors is on Twitter. Okay. So what I would say is at least think about Ethereum, or maybe you spend some time looking at Ethereum. Who were the original people associated with the Ethereum project? Some of those people have moved on to other projects, right? But you'll know that they already have credibility, right? Because they delivered Ethereum. Ethereum is an absolutely wonderful platform. It gave us smart contracts, right? Which enabled a lot of the functionality that I showed you on day 3 and day 4. So all those things with lending and borrowing, savings protocols, hyper compounding. If we didn't have smart contracts, we won't be able to do it, right? And all of that started with Ethereum. So just be active on Twitter, right? You will pick up a lot of information there, right? From some of the more significant investors, okay? Or you can think of a cryptocurrency like Terra, right? Terra has a cult-like following, you know, because the founder, Do Kwon, is very, very active and outspoken on Twitter. And, you know, he has put together a project that makes sense for most people. So by following that person on Twitter, you can look at the people he is following, right? And that will give you a sense of, okay, who is important to track, to track here. So something for you to be aware of. What max supply is something that you would look out for, and you would say, okay, this gives me confidence to put it on the short list. Well, I'll answer that differently. What you need to know is understand this way I've classified them: large caps, mid caps, and low caps, right? My own definition: large caps, 1 billion and higher; mid caps, 100 million to 1 billion; low caps, you know, anything lower than 100 million, right? That's how I currently classify them, and that's how I look at the market. So I'm not looking for a number, right? So the fact that there's a cryptocurrency out there and it has $2 million in market cap, it doesn't mean it goes on my list. Remember, I will still vet it based on those five pillars that I showed you. So the specific number in market cap isn't really important. Is knowing where it falls so that you can classify the risk opportunity, and then doing the vetting so that you know whether it is something you want to keep on your short list or not. Okay, so there's a question here about, so when you're doing the vetting process, right? So okay, maybe you didn't ask it like this, but let me ask it like this. Do you assign equal weights to each of these points? Or do you just say, if you meet 4 out of 5, right? Or you meet 5 out of 5, then you go on the short list? Now, that's an interesting question, and that one is really going to be up to everyone, right? Now, when I first started this, I was very, very rigid. So, you know, you would have to meet my requirements in each of these 5 areas, right? Before I would even have you on my short list. But like I said, there are projects where you may not necessarily know the specific investors, for instance, but you may know the developers, or you may know the investors and you may not know the developers of the projects, okay? But you have confidence because the investors are companies that are very well known in cryptocurrency space. So if you're ever looking at a project and you hear that an investor like Hashed Capital, right, is investing in a project, you want to pay attention because they do have a track record of multiple projects that they've invested in over time. So you can exercise some discretion, but don't be loose about everything and say, yeah, you know, otherwise everything will just filter through. The purpose of these things is to have a filter so that you can reject some things and focus on some things. You can't focus on everything that is out there. All right. Okay. I think that's pretty much it. Okay, so there's a question here about doing a recap on layer ones. Let me spend 1 minute doing that using DeFi Llama. So, okay. So just to explain this to you, right? And I'll use these ones now to explain that, right? These cryptocurrencies, for the most part, are layer one cryptocurrencies. Why is that? Because on top of these networks, so these are really networks, to be honest, they are not cryptocurrencies. It's just that each network has its own cryptocurrency. So Ethereum is the network, the cryptocurrency is Ether, all right? Solana is the network, the cryptocurrency is Sol. Terra is the network, the cryptocurrency is Luna. All right, so for each of these networks, right, you can build other applications on top of them. Now, if you're buying Ethereum, Ethereum is unlikely to go up in price by 100 times or 50 times between now and the end of the year. It's unlikely, right? Because it's a large cap project. You're going to need a lot of billions of dollars, right, for it to go up in price that significantly. That's one. However, some of these projects that you see here, they have a higher chance of going up in price by 3 times or 4 times or 5 times. But like I mentioned, these things can also fail. These projects can fail and you can end up losing money. So these ones have higher reward potential, these ones listed here, but they also have higher risk potential. These ones, for the most part, are large cap projects. You have a few of them that are mid cap, only very few, but for the most part, they are all large caps. So if they are going to go up, they will go up by a bit, maybe 20%, 30%, 40%, right, over time. If they're also going to drop in price, you will see these things dropping in price. They will drop in price, you know, by 10%, 20%, maybe in a day or so, right? And then you can decide to get out. It's going to be very unlikely that Ethereum will drop 90% in price in one day. These other cryptocurrencies can do that because they are smaller market caps and they are more volatile. So that's how you think about volatility in the space, right? When you're thinking about market caps. Okay, okay, I'll take this as the last question and then we'll wrap it up here. So what percentage allocation makes sense, or would I see and I would be comfortable with? So as long as about 40 to 50% of the total allocation is available to the public, I think I'm okay with that. Okay, but if I see the investors and the project team and combined, they have more than 40%, I'm worried. Okay. Now, in some cases, they will tell you that the investors will not be able to sell their cryptocurrency until after a period of time. Okay, that's something called vesting. So that's this term that you see here, vesting. So that gives some confidence that people don't want to run away, but that is no guarantee that the price will not fall. Okay, it just means that, okay, it's unlikely that the investors or the project team can abdicate with people's money if they are locked in place for a period of time. But you just need to go look at white papers and figure this thing out for yourself. Okay, well, that's going to be about it. We're good that we'll be able to take on this bootcamp. Hey, I want to say a big thank you to everyone who stayed here from the first day up until the final day. I know one of the things we said on the first day was, just based on people who are here every day, there is the giveaway with the Ledger Nano. So I'll just wait to see any final sets of comments that come in after today. And then if you're following me on IG, I will make the announcement there as to who is successful or who won the Ledger Nano and then who's going to be getting the other prizes. So once we make the announcements, worst case by Monday, just go ahead and reach out to me, send me a DM so that you can claim your prize. So everyone here who just stayed in for the educational value, I hope that you've been equipped with the knowledge you need, right? And the clarity you need to go out there and manage this crypto portfolio yourself. if you do want a chance to work with me personally, remember, I don't charge any fees, right, to work with you to build this out. Go ahead and reach out to me on IG, and let's have an interview, because I don't really work with everybody. Okay. I only work with people who are serious about, this thing, and they're going to spend time and take it to the next level. So with that said, I want to say big thank you to everyone. Thank you for listening, but more importantly, go out there, crush it, do this by yourself, and let's keep the conversation going. And who knows, if there's something else you want me to talk about, we'll have that conversation, as soon as I see the interest for this, okay? Because my intent is to just keep putting out this value out there so that you can use it for